Rajiv Samant, MD and CEO, as well as promoter Sula Vineyards on the show right now. Rajiv, hi. First, let's talk about the quarter gone by. All the revenue growth has been moderate. Your, street is concerned about margins because they've seen a contraction. Tell me what led to this, and then when is it that you see improvement coming by in FY25?
Yes, margins have contracted somewhat, but to our mind, not from 30% down to 23%. If you look at EBITDA margin, that's dropped by about a couple hundred basis points. And we've had a fantastic innings of 8 terrific quarters of growth on all fronts. And, you are going to see these blips. But I must remind all that, wine is very much a long-term story. This is, the way we see it, it's a decadal story. So you are going to have the occasional quarter where you do have the blips. And I have always been guiding, in fact, that 30% EBITDA margin is probably not sustainable in the long run. I've always been guiding that probably 27, 28% is more what we're looking for as we spend money in the market to draw more people into consuming wine, into penetrating into non-standard markets. Also, Q1 last year was a fantastic quarter. So there was a bit of a tough comparative. So, putting all of those together, we do expect to get back to the trajectory in the not so distant future.
Hi. Also, let's just talk about the elite and the premium volumes. They've grown by 18% in Q4. But looking forward, FY25, FY26, what is the volume growth you're penciling here, both for own brands, elite, premium segment? What is it that we could expect there?
So I think we're going to continue to see the premiumization story play out. That has been the story of Sula, and that's what we've really been focused on. We've always said that we are looking at that sweet spot above 700-800 rupees a bottle. The field below that is not as interesting to us. So we will continue to see the elite and premium outperform what we call our economy and popular ranges. FY25 is looking good. Q1 is a bit challenging given the elections. There are a lot of restrictions across the country on the sale, on the stocking and sale of alcobev, and stricter than what we'd imagined and stricter than anything we've seen in the past. And we have the heat wave. So Q1, we do see it as being a bit challenging, but a great return to form after a couple of months.
And what's the volume growth guidance then for FY25?
I don't really give guidance in those kinds of ways. What I would say is that everything is in place. We have a fantastic harvest. We've just completed another record harvest in terms of quality and quantity, which is very important from the sale of premium brands. So we have everything in place. We have registered more of our premium and elite brands in certain markets. So for instance, in Haryana, this year, we're looking to double our number of elite brands, which were not present right now. That's one of our most important markets. Other good news coming through from defense. We are at the last stages of getting a couple more of our more expensive brands registered there. Defense, by the way, has been our fastest growing segment over these past 12 months, something like 40% plus growth. So that's very exciting. And then our wine tourism story, several good things happening on that front, several projects. Some have just opened, some are just being signed, and that runway ahead also looks great. And in wine tourism, we only push our elite and premium wines. So especially in terms of elite, that's where a pretty significant percentage of our elite revenue comes from. So when wine tourism is looking good, looking strong, great runway ahead, that always plays out well for our elite wines.
Okay, wine tourism currently contributes about 9% of your total revenue. Given the solid customer traction at your Nashik Vineyard Resort, what is it that you're eyeing in terms of expansion in this particular segment, and how much revenue contribution do you think you can target from here?
I'm going to give you a little color here. 9% is what you see in our P&L, but that is actually only our non-wine revenue. So when you also add in the wine that we sell in our wine tourism, which in our P&L, gets clubbed with the own brand revenue. It doesn't show up separately as our hospitality or wine tourism revenue. Really, the contribution is something more like somewhere between 15 and 20%. So it's very, very sizable, very meaningful, and very highly profitable, obviously, because there's no distributor and there's no retailer. So the entire margin is ours. And that has been our fastest growing business. If you see in FY24, terrific growth, way above 20%. So, if that plays out well, then that plays out really well even for the rest of the business. So we've just opened our first standalone tasting room outside one of our campuses. So that's a very exciting development. That just shows you what we are thinking, that we no longer want to be tethered to just our winery campuses. We want to go out to where there are people who might not necessarily be able to come to us. And we want to build tasting rooms there because we now have the expertise, number one, of course, in Asia, outside China, you can say, to build and run tasting rooms. So we've just opened one more. We have a couple other exciting projects in our 2 airports close to us. We're hoping to open wine shops there. We're in advanced discussions with the authorities. That's the Nasik airport, the Shirdi airport, lots more flights coming in. Indigo has just launched a direct flight from Delhi to Nasik on the 1st of May. That's a very exciting development for us. We've just signed a new resort, which is going to be opening near our Nasik campus. We've just acquired ND Wines, which has terrific wine tourism potential. We're just working on a new project down at Domain Sula, which is outside Bangalore, just 2 hours outside. So a lot of pipeline, very exciting.
Okay, thank you so much, Rajiv, for joining in with us this morning on ET Now, giving us an understanding in terms of wine tourism, the numbers expected going forward as well. But with that, we're absolutely...
If you like this video, then like, share and subscribe to ET Now.